All right, and we're recording. So what's up, everybody? Those of you who are not able to make the live stream, I got requests to record it, and there we go. And since the requests were made to record it, that kind of motivated me to bring the fire. So I'm gonna do what I can to bring the fire. Some interesting things that I've been back testing, and just collecting some statistics on the different market types that we trade. At the moment, my system here, my Google Sheets, I was bragging it up a second ago. Oh, I need to swap internet connections. That's probably a reason. Hold on. Are you guys still there?
Yeah, I got you.
Okay. So, and there you go. Now everything seems to be working just fine. Okay. So what I did was I went and collected a bunch of data on all the different assets that, well, not all of them. There's still some more, but I got S&P, NASDAQ, bonds, crude, natty gas, gold, silver, corn, wheat. And then I did 70 years of the S&P 500. These are all 20 years. Everything else is 20 years, I think. And then actually, I can probably let you know when. Maybe. It's taking its time. Yep. I got Gregarious Gaming Systems. Name that book. Wow. I don't know why it's so laggy for me today. Somewhat frustrating, I must say. I might want to just close it and open it again. I mean, I blasted through this last night. There was no problems going on. Today, this is just ridiculous. Took that long to go to silver. So silver started in 1999. I just wanted to go to take a look and confirm, but it is really just a beast right now. I wonder, let's have a look at my activity monitor. Google Chrome is eating it all up. All right. No surprise. Let's kill that document. I'm sorry, guys. I have no idea. This thing was, I sat there and cranked on it for hours yesterday with no problem. And as you can see, it is Okay. Okay. Seems to be snappy again. All right. So again, it's like 20 years of the futures contracts. The S&P actually was a 70 years. And that's the thing about it, is it kind of has the similar, for the last 20 years, it's been 81% bull quiet. For the last 70 years, it's been 71% bull quiet, or blended bull quiet. So fairly similar. Don't get too worked up that it's obviously we've been in a pretty massive bull market. So obviously 81% is pretty good. But most likely 71%. That kind of confirms what we're seeing here. It's still pretty good. Copper, cocoa. So let's see, cocoa, wheat, silver, gold, energies, bonds, and equities are all like high 70% blended bull quiet. Remember when we talk about, I don't know if you recall or not, but blended bull quiet is my whole theory behind using the SQN is not the be all end all. It's not to tell you, oh, we buy here, we sell here. It's a trailing indicator. It's not a leading indicator. And it's a way to get a frame of reference for the market, right? So it's just a starting place. It's, where you could use something like, VIX above 25. Every time VIX is above 25, we do this. You could come to a different way, a bunch of different ways to the solution. But the SQN is not manipulated by option activity. It's not manipulated by, nobody trades the SQN itself. It's not an asset. So, a certain asset can be, you can trade it itself. So using things like that is a little bit, granted the SQN is a derivative of the underlying asset itself, but instead of going to a separate asset like VIX, and then trying to apply it to what you're currently trading, you have a level of, there's a step out of it. Every step that you use VIX on, and then you go into a different asset, it has, it's going to have different effects. Whereas the SQN just gives you what you got on the underlying asset, whatever you are looking at. The Bitcoin one was a little interesting. It's the only asset we cover that spent a quarter of its life in the bull volatile regime, and combined almost half its life, over half its life in all bull regimes. If you add blended bull with bull, we're talking, only 13% of its life is in a bear market. So that's kind of interesting. That's interesting to note. Then let's see. The other thing that's really interesting and unique is that currencies are the only asset class that we cover that really has anything going on in the bear market that's really worth paying attention to. So currencies, basically, if you look at this, it's you have volatile, quiet, neutral, quiet, and then volatile again, right? So bear, volatile, bear, quiet, neutral, or bear, quiet, neutral, bull, quiet, and then down to bull, volatile. So at the other end of the spectrum, you've got the most amount, at about 6% would be the average for a currency in bull volatile and bear volatile. So probably the median average price or percent of time is less than 10% in the volatile extremes, but still significant in that it's almost mirror image on that. It spends the majority of its time in bear quiet, neutral, and bull quiet. And so what that probably means is that you've got, as we all know, the currencies trend for a while. They'll do multi-year trends, and they do them fairly calmly. You can go back and look at the Aussie and the Euro for the past couple of years, and they, just kind of drifted down. Now, of course, the franc and the pound have been a little bit more volatile, but it is what it is. Recently, they've been more volatile, but historically, I'm sorry, the franc hasn't been as volatile recently. Earlier in the previous decade, it was quite volatile when they dropped the peg. All right. What else is interesting here? Obviously, I don't know if you followed my tweets on that one. I will go ahead and make sure. I know a lot of you did. I just want to make sure that if you didn't see the tweet, that you have access to the tweet, and I'll post it in the Slack. Okay, so that tweet's in the Slack. Rafi, are you Raf Taff McGaff, by the way? Rafi? Hey, Chris. Okay. I didn't know when he DM'd me yesterday about getting into Slack when Slack was down. So I wasn't sure who, but easy to put that together now. Where are you hailing from, Rafi? Where do you live? Toronto. Oh. And we have Kyle's in Toronto as well. At least one more in Toronto. Let's see. Let me see what you wrote though. Hey, Chris, I use the SQN regime definitions from your TradingView code and for the USD CAD daily data going back to 1970. I'm getting bear volatile accounting for roughly 24%. Not sure why my number is so different. Are you using less than? So I don't know if I dare go to the dollar CAD. Pair. I think I did. So not the indicator in this, I just did, this was standardized. So negative 0.6 would be bear quiet. Negative 0.6 to negative 1.7. So I literally just pulled the data and then ran scans on it. And then there still could be some cleaning that needs to be done. But yeah, I just ran scans on the formula or whatever the number was, and then organized it by that. So maybe when I'm more confident in my spreadsheet at the moment, that if I switch to dollar CAD tab, that it would actually go there. But I was getting some major amounts of lag on my computer from Google Chrome. So I just want to, rather than go into that tab, because man, this thing has been a beast. So that would be right, because according to, correct, that's exactly right, Rafi. That's the analysis I did. And if you add 19 plus 5.12, you find yourself in bear volatile, or the two of those combined. So bear quiet would be negative 0.6 and negative 1.7, and lower would be, so combined, this is 24.20. Is that what you have? 24.20? Then that's how we account for it. Problem solved. Tom, I'm gonna, not you, different Tom, it looks like. Thomas Ballinger, our new guy. Tom B. He just liked the tweet, and he's an anarchist, full-time computer engineer, part-time trader, forever hungry. If you're in the group, Thomas, Tom B, different Tom. That's pretty awesome. Full-time anarchist. Okay. So some other characteristics here. Thanks for that question. Thanks for the I'm glad to give you the clarification there. Rafi, if you don't have the correct, so a lot of the one I shared of SQN on TradingView is a different one. It's an equity one, adjusted for equities. And it's less than, this analysis I did was equal across all asset as opposed to adjusting for equities, because as you can see why we do the adjustment for equities now. And actually, let me go down that point right now. The TradingView one that I shared, and it's because TradingView doesn't allow, for some reason, I haven't paid enough attention to write up the explanation, but here, I'll show you what. So bull V, bull Q, neutral V, neutral Q, bear Q, bear V. Okay, so it's negative 1.7. So it's negative 0.6. Negative 0.6 to negative 1.7. Neutral would be negative 0.2 to positive 0.2. Neutral vol to be negative 0.59 to negative 0.21, I think is what it is. Bull quiet would be, 259 to negative 21, and plus 0.21 to 0.59. Bull quiet 0.6 to 1.7, and then 1.7 and above. Does that make sense, Rafi? So you can do those calculations you can go into the code in TradingView and make that work out if you like, or you can, I posted one in this, there's been a couple of posts in Code Warehouse. It should be stuck in there somewhere in the Slack channel, and you should be able to find it there. Okay, so what we know now is that on the equities and then basically on every asset class, the majority of the work that we should be doing should be in, and it's what I call the blended bull here. The majority of time of all assets is spent in the blended bull. And for me, blended bull is basically positive, neutral. So above the neutral line, above the zero line. So 0 to 1.7. From 0 to 1.7, it might even be the neutral vol too. But basically we spend about, on average, across the board, basically 70 to 80% of our time trading in the bull quiet. And then we basically spend the rest of the time, either in bull volatile or bear quiet, and it's, you know, smaller amounts that we're in there. And then the least amount of time is spent in bear volatile. The least amount of money is to be made in bear volatile, which we've done a lot of research on trading the bear volatile market regime, and it's just not profitable. There's the only good way to trade bear volatile is to take profits, short it when everything's nuts, and then exit when you have profits. That's really the most repeatable way to trade it. You can luck your way into it. You can, you know, think you're the biggest genius in the world. You can do all those, you know, a mastermind who's able to think through the solutions and do it all, and, you know, go for all that. That's fine. But the reality is, if you can get a strategy for the blended bull quiet, you're going to 3/4 of the amount of time that you're in the market, you're going to have a profitable strategy. So the other thing you could do is say, if it's not in blended bull, I'm just not trading. That's a fine strategy. Or go to discretionary when you're out of blended bull, for example. And that way you can be the smart guy. But what most important, or girl, Diana, most importantly, what it allows you to do is you don't mess up. If you know that like 70 to 80% of the time you're going to be trading in bull quiet, you don't have to think to yourself like, oh man, this is probably the top. I'm scared. The market's going to fall apart here. If you realize that it spends 70 to 80% of the time in this market regime, then there's really no reason to think, okay, well, you know, I'm gonna short this right here. You know, we're right at about 13,000 or 12.8 on the NASDAQ. I should probably be shorting this. 76.84% of the time, the right move is not going to be to short the, you know, so 3/4 of the amount of time is not to trade this. Said another way, 1,000 of about 4,000 trading days is over the last 20 years. So blended over a course of 21 years now, you'll have 1,000 of those days are not in bull quiet. So that's 3 years total, but that's blended over 21 years. So that's a lot of time to try to get it right. And if you realize that it's only in 8%, 10%, and 0.3% of the time, then you may consider, you know, trying to figure out something to do in bear quiet or bull volatile. That would, after you have a really solid blended bull quiet strategy, once you have this, your 80-20, if you're familiar with the Pareto principle, where 80% of your success comes from 20% of your work, you know, this is just as blatantly obvious that is the case to stick with, right? If you know that 80% of the time you're going to be in the blended bull quiet regime, all you have to do is figure out a strategy to trade that regime, which we already have. Like, it's, you know, however you want to do it. You want to day trade, we got a way to do it. You want to swing trade, we got a way to do it. You want to look at a portfolio method, we got a way to do it. Or even better, we have a bunch of people here who are willing to work with you to help you come up with one on your own. One of the big things that a lot of people find is that intellectually they want to have their own strategy. They don't want to use somebody else's strategy. And, you know, first of all, I give my strategies away for free. So if it would be easier for me to sell them to you so that you would use profitable strategies, I'm happy to do so. I'd be happy to sell you my strategies if that's what it takes to get you trading a profitable strategy. They are for free. Also, you know, I get the intellectual curiosity of wanting, or, you know, whatever, the want to do your own strategy and not, you know, to be your own boss, I guess, to come up with your own, to have your own intelligence, I guess. I totally get that. But your bank account or your trading account or your prop account, like, nobody cares that you're doing someone else's strategy. The only thing that really matters there is that you make money. That's all that really matters. I know that it's, you know, it's really enticing to want to have to come up with your own. It's very exciting, very, you know, interesting and problem solving. But in the meantime, feel free to take my stuff until you can come up with your own, if you're having troubles getting that sort of stuff through. Cool. Okay. So we know the numbers on, this is the standard SQN, and then we had an adjusted one that we use for, there was an adjusted one that we use for equities. And that's the one that is on TradingView. Oh, my neck is jacked. Those 1,000 burpees kind of got me like 3 or 4 days after. So what I did is I did this blended thing. Another thing you can do, so you can go into the SQN and just say everything from negative 0.2 up to 1.7 or 1.69 is blended bull quiet. You can adjust the indicator there, and that'll help you see what regime you're in. And the reason I do that is because one thing, you could look at what happened in NASDAQ this year. When, you know, last week when we were doing like the play-by-play bar by bar of the NASDAQ, and how we know by the trading characteristics which regime it's really in, then we don't need to have the SQN tell us. We can actually just figure it out. So the numbers there, that's how you know. That's pretty much the clue that gave me, you know, the blended bull as something to look into. All right. Any questions here? Looks like we're good. All right. NASDAQ, nothing to do there at the moment. Bitcoin just be long. That's pretty much our measured move target. $36,210. We hit 34.8. I mean, that's pretty close to the measured move target, but we're still there. John D, would you say the concept for the blended bull quiet is more for equities than FX? Well, it still works, but FX tends to be, it's still 2/3 in bull quiet, blended bull. But yeah, FX trades differently. So FX is more of a uniform distribution for the most part. I shouldn't have Bitcoin as part of FX. Let me do kind of a color grouping here. Okay. So you can definitely tell the difference between, where everything's in bull quiet and from neutral to bull quiet on the futures contracts. In the currencies, it's an even distribution across all of them, where you've got, less, it's almost even in bull quiet bull volatile and bear volatile, almost exactly. It's almost equal in bear quiet and bull quiet. And then the neutrals are, it leans a little bit more to the bull quiet and bear quiet on the neutral side than it does sitting in the middle doing nothing. So to answer that question, John, yes, I think if you're going to trade each asset class, you have to understand the underlying incentives of each asset class, which is something I talked about on that tweet, where currencies don't have the same incentives that like equity indexes have. Equity indexes incentives are to go up. And they basically throw out all the bad ones, all the bad companies, and bring on all the good companies. That's how, that's how they do it. So you're already, by trading an index, you're already trading a very effective strategy. They've got, these are massive. The S&P 500 is a pretty big company. And they, Standard & Poor's I believe it's a pretty big company, and they pretty much just kick out the worst performers and bring in high performers, which is portfolio management, right? That's what you do with if I was looking at what I would want to do to my portfolio to make money, I would put in the high performers, and then I would look at my portfolio and find the ones that are not performing, and I would get rid of them. That's basically what they do there. So they're already built to go higher. There's no surprise that that's what they do. And so when we look at it, this adds up. This makes sense. This is what it should be here. Equities are the highest. We've seen some pretty strong bull markets in commodities in the last 20 years. So that could explain why we had some pretty big moves in those. But currencies, the thing we know about currencies is having a weak currency isn't always a bad problem, and having a strong currency isn't always a good problem. And so, if you want people to buy your exports, having a weaker currency is a really good thing, because other countries can use their currency to buy your product. And so you can become a net exporter. Or if you want good buying power in the world, having a strong currency would allow that for you. So that's why, the weak dollar thing is probably, I still think that that's going to continue to happen, mostly because, we're working on bringing manufacturing back to the United States. And in order for that to be profitable, it should make money, or we should be able to sell our products at a profit. We will be subsidized for a while, of course, but we would want to make a profit. So cool. Hope I answered that, John. Any other questions, guys? You guys want to go on anything else? Yeah, John. John says, so for FX, it seems to make sense to have one strategy for bull and bear quiet and another for neutrals. Now, you may find that the strategy, like the Feldwall breakout, works great in bull quiet, neutral, and bear quiet. You may find that that's the case, or you may find that vol breakouts work. It's certainly, having those things to start with will allow you to know what you're working with there. I had data somewhere. But yeah, if you're using our main spreadsheet here for your back testing, then you have the tools to do it. So if you're doing, this is the main spreadsheet. If you're using a different spreadsheet, get this spreadsheet, because this one will this is the one we're working off of. Now, if you're using your own strategy and you're not using the VBO, FVBO, VBO2s and all that, just all you have to do is just name the setup you're using, and then put the percent risk that you're using on that standard 2%, 1%, whatever. So let's say you're doing something like a MACD trend, like they got here, like just add that into it. And then when you go back and you're doing your back testing on FX, for example, you're able to enter in the setup so that you can then, more importantly, go to the appendix and you can see, not there, data table, sorry. You can go to the data table and find out what setups in what regimes are working, right? Okay, perfect. Yep. So that's how you should be going about it. Does it not make sense to only trade the NQ and GC based on those figures? Yeah, it does. That's a fine strategy, Simon. That's exactly what I'm saying. Like, why mess with trying to, do everything else if you know that the S&P and the NASDAQ and the bonds, like if you know that you have this amazing advantage, why would you mess with anything else, right? That's exactly my point, Simon. You can. A lot of people like to be, very intelligent and, think through all these things and want to have this massive strategy and ways to do things. Totally cool, but working smarter, not harder would say grab the NASDAQ and gold or the S&P and gold or whichever one you choose and go. I'm trading, my algo trades NASDAQ and silver. Bring me up to personally trade gold if I want. All right. Any other questions? How's everybody doing on the tryouts, on the prop tryouts? We all progressing right along? I'm going to give NASDAQ a little breathing room, a day or two more to let it kind of play out the first of the year stuff. Usually the first couple of days, even the first week of the year is a little, this year it just happened to land on a Monday, first trading day of the year, as opposed to like a Thursday or a Wednesday. So we're getting a whole week. We might see things be a little whipsy and a little light the first week or so, but then things should jump back into normal and we should have ourselves, we should be fine on within a day or two, maybe even the whole week before things really get back to normal. There's no rush on my end to do anything here. I wouldn't be too worried on your end too anxious to get too far into the market here. We've got our equity, the macro ETF portfolio, all the trades been issued out. I don't know if we got filled on EEM yet. Let's have a look. Looks like no. Nope. Running away from us. All right. Probably if today's candle continues like this, I'd probably be looking to add to NASDAQ on a move above this. So expecting a couple of days sideways, and then I'll be looking to add to my NASDAQ long, my swing long later this week. And that's it. No more questions, it seems. So I'm going to go ahead and close up shop for the day. I will continue to be in the Slack and go over things as needed, but for the most part, I'm just going to...
I have a question. I asked the question before, but I forget the answer. How you get the regime on TradingView? You know, the chart you have below the normal candle, where you
on
have
TradingView, you go to indicators and you type in SQN, and then you see SQN Chris D.
Okay.
Right there. And then there you go.
Okay, thank you.
You got it. All right. I think that's about it then. Everybody have a wonderful day. Happy New Year. And let's chat. We'll keep chatting in the Slack.